Joining us, Matt Maley, Chief Market Strategist at Miller Tabak, and David Harden, CEO and Chief Investment Officer at Summit Global Investments. Welcome to you both. All right, I was a little bit snarky there at the top, Matt, because I love your notes and I read the points. I mean, everything has just been going up. I laid the numbers out yesterday. I'll lay them out again. 123 members of the small cap 600 have gained more than 50% this year. This year. Do you expect any kind of a pullback anytime soon?
I do. I think that the market, I mean, it's kind of weird how the way we're kind of replaying what we did last year when the market was priced for perfection. There's a lot of good reasons to think the market go a lot higher, but they've all got to fall into place. We was priced for perfection. Nobody expected that the downturn would take place, that the coronavirus would have a major impact on the markets and the economy, and only a few people were warning about that. Now we have a few, Dr. Michael Osterholm, who is the head of the Center for Infectious Diseases, and he's talking about a Category 5 hurricane of these new variants hitting the hospitals, and the hospitalizations are going to skyrocket. That's going to cause more slowdowns. Maybe he's wrong this time, but with the market where it is and really priced for perfection, I just think some people need to step back a little bit, not be chasing the market, especially with so much speculation and leverage in the marketplace right now, and be careful about a little bit of a pullback.
Yeah, David, I do wonder, you look at the math, right? Okay, interest rates are not zero, but they're close. The 10 years come up, but it's still very low. And you may have a couple $100 billion new dollars going into the equity markets when the stimulus checks hit as well. We know that, 25 or 30% of the people out there have been putting that money into the equity markets. There's an article I forwarded on that from MarketWatch just today. I mean, it's kind of hard to say stocks go up simply because there's more demand than supply, but that seems to be the case.
Absolutely. And it's really hard not to be near-term positive on the markets because, listen, we probably have another package coming here soon of $1 trillion. And our estimate is that this time around, even more money might go into savings and the market, upwards of maybe 70% of this next package. So, yeah, we definitely see, obviously, this stimulus bubble, we think it continues. There's some problems long term, but who's looking at long term? Definitely not the flash mob of retail investors.
Well, David, the amount of equity, and Jim Cramer's pointed this out, I've pointed this out, the amount of just stocks on the market has come down by like 30% in the last decade through mergers and buybacks. You got huge amounts of money in the world, stimulus coming. And I understand Matt's point about the possibility of this fourth wave or whatever it might be from some of these other strains, but the market doesn't care, right? Because it's simply supply demand, which is also why you like Apple and Amazon.
Absolutely. It is. It's getting down to that. It's supply and demand. And I get it. There are some long-term problems. I think people need to look at risk. I think that's the real problem here. A little bit more risk management in today's market would be great, but they're shrugging that off. You look at Amazon and Apple, both $100 billion plus quarters, right? There's some valuation. Apple, people are worried it's 30 times revenue instead of their average 5-year at 17. But the reality is that valuation has never caused really market collapses. So worrying about valuation in this time period doesn't really make a lot of sense. We like Apple. We like Amazon.
Shepard Smith here. Thanks for watching CNBC on YouTube.